Hey Team DSF, this is your girl Tanaya-Marcia Silhouette, and this is your Team DSF weekly business training. I'm just going to give it a couple seconds so everyone can jump on this live stream. Just a few more seconds. All right, we're going to go ahead and get started. I'm very excited this week because I have a special guest presenter with me on the phone, Mr. Greg Washington. And this week we're going to be discussing tax preparation tips for entrepreneurs. And I reached out to Greg because I think that it's very important that we utilize our subject matter experts in order to help us grow our businesses. You know, the main focus that we should always have is making money and just growing our businesses. But we also have to make sure that we take care of our finances and make sure that our businesses are running properly and they're legal and they stay legit. And so filing your taxes is one of those admin things that we all have to do to make sure that our businesses stay compliant with the government. So I have Mr. Washington on the phone with me so he can give you all some tips on how to manage your finances and manage your taxes. Now, a little bit about Greg. He is a partner with TFP Financial Services. He's originally from Fayetteville, North Carolina, and he played college football at West Point. He was a four-year letter winner and team captain, and he had the honor to play in the East-West Shrine Game. Now, after his graduation, he was commissioned into the Army as an infantry officer, where he deployed to Afghanistan and Iraq. So we salute the veterans, right? After his military service, Greg worked as a senior consultant for Booz Allen in Hamilton, and then in inventory management for Shell. So he has 3 years of experience assessing and validating property taxes for the oil industry, and he also has 10 years of experience doing individual tax returns. So it's very important, like I said, that when you are reaching out to people to help you with your business, that you reach out to professionals that have those credentials to make sure that you're running your business smoothly. So, Greg, I definitely want to thank you, first of all, for jumping on the line with me. I know I kind of contacted you last minute, but I really, really appreciate you getting on the phone today.
Oh, not a problem at all. I appreciate you having me.
All right. Let me know, just give me a thumbs up, guys, if you can hear us. Just give me a thumbs up if you can hear Greg and I. I want to make sure our audio is good. So I'm gonna pause it real quick just to see. I just want to make sure you can hear us before we get started here. Okay. All right. So, Greg, I'm just gonna let you know, you might have to speak up a little bit, but we're going to go ahead and jump into these questions, all right?
Okay, I'm here.
All right. So the first question is, what are some things that you can and can't write off on your taxes as entrepreneurs?
Well, a lot of entrepreneurs do not know, like, the tax code, so every year is always changing. And so a couple of things that you got to keep in mind is, for an entrepreneur, how are you working, right? So you have some entrepreneurs that are home-based businesses. Mm-hmm. And being a home-based business, it'll allow you to write off a certain portion of your personal taxes toward the business. So, okay. For example, like your home. Let's say you have a home that's 1,500 square feet, right? Mm-hmm. And, you know, for good math, let's just say 500 square feet of it was used for office space.
Okay.
Now, when you say office space, that's space where you either allow clients to come in and, you know, you do your work, or you have it set up, you know, completely for your own business, mm-hmm. right? And basically devoted for your home business. So 1,500 square feet home, 500 square feet office space, that's 1/3. So when you look at it, 1/3 of your rent, if you're owning, not your mortgage. If you have a mortgage, you won't be able to write it off. 1/3 of your utilities, 1/3 of your internet and phone connection.
Okay.
You'll be able to write off, right? A lot of folks don't know that.
Oh, okay. That is good to know. So 1/3 of basically your overhead expenses of your household, because that is the amount that you're using for your business. That's what you can write off.
Correct. But
okay.
It depends on the ratio between how big your home-based business square footage is versus your home.
Okay. So the square footage of your actual home office, or the area that you have designated as your home office, that's the percentage based on that out of the total square footage of your home. Okay. And some of the audience is saying to speak up a little bit more. But yes, that's good to know, because a lot of my business partners are homeowners, and I'm not sure if they knew that they can write off those expenses. So that's really good. What else can you write off?
A couple of things. One is insurance, right? So I know healthcare insurance has been a big thing in the industry. I'm here and then want to repeal it and everything. But if you have a home-based business and you buy insurance for you and your family, you will be able to write that off as well.
Okay.
Right, as an expense.
Okay.
The other thing that goes into play is your automobile, right?
Mm-hmm.
So you can run your automobile from home to your regular 9 to 5. That's not a write-off expense.
Okay.
Okay. Because that is your place of duty, and I come from a military background.
Mm-hmm.
That's your place of duty. So you are required to go from home to your place of work. But if you go anywhere outside of there, if you have to run and go to another meeting, or if you have, they assign you to go do a brief or work somewhere else,
mm-hmm.
that expense, as far as mileage, is written off, or can be written off. One of the apps that I like to use is Mileage IQ, which allows you to differentiate between your personal and your business miles.
Mm-hmm. Okay.
Right? And so when you look at being able to travel, if you have more than one car, if you have a car that's designated for your business, you'll be able to write that off.
Wow. Okay.
Now, when I say that, not necessarily the payments. Okay, so if you lease a car under your business name, you'll be able to write off the lease.
Got it.
But if you own a car and let's say you bought it under your Social Security number,
mm-hmm.
your personal, you'll be able to write off the either or the mileage or the gas that you spend for that vehicle.
Okay.
Right? On top of it, any repairs, any parking fees, any tolls, if you change the tires, if you register the vehicle every year to get new license plates and everything and registration, you'll be able to write all that off as well.
Wow. I didn't know that about the registration. Okay.
Yeah.
That's awesome.
But the thing of it is, with your vehicle, right, you have to be able to say, okay, you have to keep a mileage log, okay?
Mm-hmm.
With the mileage log, you say, okay, from this day, I went from this location to this location, and you have to give a reason why you went there for your business.
Okay.
Right? So if you ever get audited by the IRS, you have this nice, neat layout of your mileage log of why you drove, where you went to, and why you're able to expense all of those expenses for your business.
Okay, so for instance, if I drive from my house to a prospect's house to do like a one-on-one presentation for my business opportunity, I can write off that mileage and that gas for that trip and back.
Well, it has to be one or the other, either the mileage or the gas. You can't do both.
Okay. Either or.
Right.
Okay.
Yep, either or. And so normally when you look at mileage, I think the government rate right now is 51 cents per mile.
Okay.
As far as, normal wear and tear.
Okay. So you just decide which one is more?
Yep.
Okay. So now if I do want to write off my gas, would I have to keep the receipts every time that I purchase the gas?
Yes, you would.
Okay.
And the one thing that I tell all my clients is that it pays to be organized.
I agree with that.
And the reason why I say that is because when you have to think about, okay, if the IRS ever comes and audit me, what am I going to do? And so I have a system that I put in place with all of my clients to where if they ever get audited by the IRS, they'll be able to satisfy all those audit requirements.
Okay.
Right? And documentation is the key.
Okay.
Between saving all your receipts and listing out why you have that receipt, what it's for, and what the expense is, as well as completing having a bank summary of all your transactions, right? And being able to do an annual summary of, let's say gas, personal expenses, business expenses, the whole nine, where everything is listed out. You're able to have a complete synopsis of your business profile that you can hand to the IRS that allows you to be able to satisfy any IRS audit.
Okay, makes sense. Totally makes sense. All right. Well, that goes into the next question. How can you track your finances throughout the year? So you said you set up your clients with a system. What are some things that we can do on our own to track our finances throughout the year?
Okay. So when you talk about tracking your finances, and let's say you have a home-based business versus your personal, right? So when we talk about your personal, that's your, for lack of a better term, your 9 to 5.
Right.
I like to tell my clients, right? So your personal and your 9 to 5, of course, most of us get direct deposit these days. And so having a bank account for your personal and then going out and having a bank account for your business is key, right? So that way you can differentiate between what's personal and what's business.
Makes sense. So it's all in one spot.
Exactly.
Okay.
So normally what I tell my clients, especially those that are starting out with new businesses, is okay, hey, look, I understand that all your money is going to flow into your personal account. Every month or every pay period, take and put money into your business account. Once your business account is established, two things that allow you to happen, okay? One, when it comes to satisfying audits with the IRS, everything that's listed for your business is already in an account. So you don't have to go through thumbing for receipts to figure out, what's business and what's personal because you've done all your business stuff in your business account.
Makes sense. So are those bank transactions, what you see in your bank statements, do you still need receipts if you have the bank statements that shows that that's what the purchase was?
Yeah, you do.
Okay.
You still need those bank receipts. So,
okay.
What I normally have my clients do is I have them keep all their receipts. So let's say you're not a person that's organized. Do yourself a favor, go get a shoebox. Put your receipts at the end of the day in the shoebox. You don't got to organize it. Just throw it in the shoebox at the end of the day, right? And then come the end of the year, let's say you bank with, a really good online bank that will allow you to export all your transactions for the whole year into an Excel file. Now, once you put those into an Excel file, you sort them, and then you're able to categorize all your expenses for the year because you have your separate bank account for your business. And so you're able to write off all your meals, all your travel expenses, any supplies, advertisements, etc. for your business.
Makes sense.
And so when it comes time for, let's say, if the IRS comes to audit you, because everything, it all depends on, what the IRS is going to do. Now you have, okay, I have a summary of all my expenses from my business bank account, right? That lays out, my annual totals. I have my bank statements that if they want to go through, they can. And then I have my shoebox full of receipts that if they want, to see the expenses, that's the documentation there. So having those three things in place will normally satisfy an IRS audit.
Okay. That's definitely good to know. Thank you very much for that. Now, what forms should my network marketing company be sending me and, for me to file my taxes? Like, should I be getting some kind of form from my company every year?
You should.
Okay.
So when it comes to the forms, right, especially with network marketing, what you're going to end up getting is either a 1099 miscellaneous or 1099K.
Okay.
And so what that is kind of like, you're self-employed, right? You have a certain particular set of skills that you are being hired for and compensated for. So having that 1099 shows that, okay, you as an individual or, as your small business is performing a service for, compensation, right? So when you look at what forms you need, the 1099 miscellaneous, right, is the biggest one. Now, the thing with being self-employed is the fact that you do not have, you're not covered when it comes to fringe benefits for your business. Normally because, if you're a W-2 employee, your company provides you with all of those healthcare benefits, right? So you being an independent contractor, you get paid all your money up front, and then afterwards, you have to pay the self-employment taxes as well as, whatever fringe benefits that you award for yourself and for your family.
Oh, okay.
Okay. So when it comes to being self-employed, those are the two key things that you have to think about, okay? Paying fringe benefits and also, that 1099 miscellaneous form. Okay. Good to know. Now, what if I am an S corporation, a C corporation, or an LLC? Is it different for me versus like a sole proprietor? Like an individual person? Or it is.
Okay.
So between having a S corporation, a C corporation, and an LLC. So when you think about an S corporation, what you're going to end up having is a pass-through company. So any income that you have from, let's say, your S corporation is going to be passed to the company and shown on your personal income taxes.
Oh, okay.
Okay. The other thing with an S corporation is, liability. So if you were working and let's say something happened and you get sued,
Mm-hmm.
Because the S corporation is the pass-through company, the person that's suing you can go after your personal assets,
Oh, okay.
right? Which is a bad thing.
Yes.
So I typically steer my clients away from setting up an S corporation.
Okay.
With a C corporation, along the same lines, a C corporation, you want to set one of those up, especially if you have multi-members, or if you know that your business that you're going is going to go large. Let's say you have this fantastic idea, and it's just going to spark the nation, and everybody's going to jump on it, and all 50 some states are going to get on board with it.
Mm-hmm.
Okay? And so having a C corporation will allow you to be able to operate in those different states once you get that C corporation set up. Now, having a C corporation, of course, there are a lot more requirements that the IRS is going to hold you to, as far as, okay, well, I have, bi-monthly or monthly meetings
Mm-hmm.
that I have to, record the minutes and the whole nine
Mm-hmm.
For. Because in a C corporation, you typically have more than one partner or member that's
Mm-hmm.
a part of the company. Okay?
Okay.
Now, when it comes to an LLC, which is the best, especially for small businesses and startups, you have an LLC. What an LLC does is it provides an extra layer of protection.
Mm-hmm.
So the difference between the S corp and the LLC is with an LLC. Let's say you go out and you do some business and you get sued for whatever the case may be.
Mm-hmm.
With your LLC, what's going to end up happening is it stops there, right?
Mm-hmm.
So whatever assets that your LLC owns, that's the only thing that a person is sued for. Versus an S corporation, they can take all your personal assets.
Oh, okay. Okay. That's definitely good to know. Thank you for that breakdown. That really puts a lot of things into perspective. Now, should I hire a professional, or what if I decide to use like online programs to file my taxes, like TurboTax, or go to H&R Block or whatever? Are those fine? Can you hear me?
Really good question.
Oh,
Yeah, I
okay.
can hear you.
Okay.
Really good question. When it comes to, in hindsight, bookkeeping, right?
Mm-hmm.
And using your personal, or doing your taxes yourself versus allowing a professional to do it.
Mm-hmm.
Right? A lot of folks don't know what the deductions are, let alone all the different forms that, are needed, or what can be written off versus what can't. Right?
Mm-hmm.
So, for example, let's say you have your home-based business and you want to write off uniforms and the upkeep of those uniforms.
Mm-hmm.
Now, if you were military, right, the military requires you to keep your appearance in a professional manner so that you can do your job.
Right.
So, for military personnel, what that means is, okay, if you go out and you buy detergent for your uniform, or if you send your uniform to the cleaners, or, to get your boots cleaned, if you go out and get a haircut, or go to the salon to get your hair done, those type of things are a tax write-off.
Mm-hmm.
Right? Because the military requires you to keep a professional appearance.
Right.
Now, for someone that has a home-based business, if you go out and buy clothes for your business that you can also wear the same day, or on another day as just some everyday clothes,
Mm-hmm.
those aren't tax write-offs.
Oh.
But if you have uniform specific, shirts or apparel, you're able to write those off.
Okay. Okay. I did not know that, so that makes sense. So I guess going to a professional is preferred because they would know what you can and can't write off.
Correct.
Okay.
And with everything, there's always the interpretation of the tax law, and so being able to talk with a professional and have them look over your file is always a plus. I've had at least 6 clients this past year that normally use TurboTax for their business or home-based business, and they missed out on anywhere from $2,500 to $3,600.
Oh my God!
Right?
Wow.
On tax write-offs because they didn't know. But the thing is they thought that they knew everything and used TurboTax software, and they were good.
Okay.
And what I tell a lot of folks is that, and I'm not knocking TurboTax or like H&R Blocks, but those in mine are government-funded businesses, meaning that they are working for the government as opposed to for the individual.
Huh. Okay. That's good to know.
Right. So
yeah.
I always recommend my clients to seek professional help from a tax professional versus just doing it on their own, because there are, and it's funny, H&R Block, their slogan is, you got billions of dollars on the table that you're leaving there. Well, they're part of the reason that most folks are leaving billions of dollars on the table because, they're not taking the time to go through and let their clients know exactly what they can and can't write off.
Oh, okay. Wow. Okay. One of our audience members asked a question. They asked, inventory that you purchase out of your business, like for instance, a home-based business in network marketing, we usually have products that we purchase on a monthly basis to use as like samples and help us grow our business. And are we allowed to write that off? We call it like an auto ship. It's our monthly overhead of products that we purchase to sample out. Is that something we can write off on our taxes as a business expense?
Can you write inventory off as a business expense on your taxes? Is that what you're asking?
Yes.
Well, yes and no. Okay? And so I say yes and no because, if you have inventory that has either been sitting and going bad and you can no longer use it, yes, that's a write-off. All right?
Okay.
Now, if you have inventory that is sitting still good, still in good condition, of course you have to pay taxes on that inventory. Right?
You mean when I purchase it?
Yeah.
Okay.
And so it is, of course you have to pay, that tax on that inventory. Even if it's property tax that is sitting there in a warehouse somewhere and you hadn't, sold it yet.
So what if I purchased a product from my own business and I used it as a demonstration for like a business presentation, or I gave it away as a sample to a prospect that I'm trying to get into the business? Would I be able to write that purchase off on my taxes?
Yes, you can. You can.
Okay. Because I do that a lot. I buy a lot of products every month and usually sample it out and give it away to people.
You can write it off as a loss, or you can write it off as part of your advertisement.
Ah, part of advertisement or as a loss. Okay. Okay. That's good to know. Thank you for that. Now I'm gonna skip ahead here because we are getting to the 8 o'clock hour. Bookkeeping obviously is important, right? Because you just discussed that earlier, and maybe how to track your finances. Is that something we should outsource as well, or maybe a combination of both?
I would say it's a combination of both.
Okay.
If you want to be successful, you have to have a pulse on your business. But at the same time, you can't do everything for your business as well.
Okay.
So outsourcing is very key.
Okay.
So when it comes to the minutia of finances, having someone to keep your books is not a bad idea.
Okay.
Because now that frees you up from having to figure out and categorizing all these different expenses, as well as you having to change hats and go out there and grow your business, let alone operate it.
Okay. Okay. Makes sense. Now, I'm going to skip this question because you already answered that. Should I have a separate bank account for my business? You said yes.
Yes.
Yes. All right. And do I file separate tax returns for my business and personal taxes? You already answered that. I guess it depends on what type of entity I am, if I'm a sole proprietor versus a corporation or an LLC.
Correct.
Okay.
So if you have multiple members or partners in your business, then you will want to file it separately so that each one of you can, one, take a salary from the business, and two, you can distribute either expenses or dividends for that business.
Okay. Okay. Now, what if I didn't file my taxes in the last few years? Like, what do I do? Do I just, am I in trouble or?
Come and see me.
Okay. Okay. All right. Okay.
What most folks don't know is, let's say you're late on filing your taxes. If you were due a refund, then you're not going to get penalized for filing your taxes late.
Okay.
If you owe your taxes and you file them late, then of course you're going to get penalized for that.
Okay. Okay. So definitely go see a professional if you're late on your taxes. Okay.
And like my company, we go all the way back as far as 2011 to complete person taxes and electronic.
Okay.
After that, it's paper.
Okay. All right. Now, if it's overwhelming for someone, I'm assuming they just need to go contact the tax professional and find out, what to do with their own situation. But how do I know if these tax professionals out here are legit?
Well, you have to do your homework, of course. Researching them, right? A couple of things that you can do is the IRS has a list of all the qualified tax professionals out there that allows you to go on to their database and be able to check a person out, right? So that's one. Two, being able to understand, certain, I guess you say, knowledge about the business helps you as well. But, you essentially have to just, fill a person out and make sure you're comfortable with giving that tax professional all your personal information, because essentially you give them a synopsis of your life, your spending habits, how you use your money, how you've earned a living.
Okay. Okay, so the IRS website would be a good place to start to find a legitimate tax professional.
Correct. That'd be the first good place to start.
Okay, now wrapping this up here, what other advice do you have for the audience? Anything you want to tell them?
The biggest thing that I would tell the audience is, like I said earlier, organization is key, right?
Mm-hmm.
It pays to be organized.
Okay. So definitely be organized, even if that means just throwing all your receipts in a shoebox. At least you know that all your receipts and things are in one spot, and then you can hand that over to a tax professional like you who can sort through it and make sense of everything. Okay. Now, I do want my audience here to have a way to get in contact with you, just in case they have some one-on-one questions for consultations. Do you offer like free consultations, or is there a fee if they just want to talk to you, or how does that work?
I do a free consultation and estimate. So if you want to know how much you're looking to get back, or how much you owe, or if you want to sit down and do like a tax strategy to figure out, moving forward, what's the best thing for you.
Mm-hmm.
I offer my clients a free estimate on being able to do that.
That's awesome. So, your name is Mr. Gregory Washington, and you can be reached at gregory.washington@tfptaxcenter.com. Is that a good way for them to reach out to you to set that up if they have any more specific questions pertaining to their situation? Okay. Well, I know we went a little bit over, and so I do appreciate you taking the time out to get on the phone with us and just give us some general tips. I know you're busy and we're busy, and it was kind of loud in here. I apologize for that. I'm in a conference room. But I want to thank you once again for just showing us where to at least start so that we can just focus on what's important, which is growing our business, making money, and achieving that financial and time freedom, and having amazing subject matter experts like you to make sure that we stay compliant with the government. So, Gregory, thank you once again for getting on the phone and giving us some tips.
Oh, you're welcome.
All right, well, you have a good evening, and this is your girl, Tanaya-Marcia Silhouette. This is your Team DSF Weekly Business Training. Thank you guys for tuning in. See you next week. Peace.